Huge economic red flags have just emerged, and a new report came out, new data showing us that things just got a lot worse for most Americans. Hey everybody, you're watching Bull Boom Bear Bust. My name is JJ, back with another dose. BX4 News back in the building. Ride the bull, prepare for the bear. Let's go ahead and get into it, folks. Starting right here. New data out of the Fed showing the wealth gap in America just got worse. People often say, not too often, but every once in a while somebody comes down and they say this guy is just negative, this channel's doom and gloom. Here we go. Another thing that we said was going to happen happened. The wealth gap just got worse. More wealth being shifted up to the top 1% and the top 10%, and the bottom 90% getting worse off as far as the debt levels and the amount of savings that people have on average. Recent data shows us that the wealthiest half of Americans, the top 50%, owned approximately 97.5% of the nation's wealth. Think about that. The top 50%, 97.5% of the nation's wealth. And that just got worse from the previous report. The bottom half, the bottom 50%, now have a mere 2.5% of the wealth. So things continue to shift in the wrong direction, not just for the bottom 50%, but also for the bottom 90%. We have other data coming out here that supports this, as we know that the top 10% now own about 93% of the entire stock market wealth, basically. And that jumped up. It was 89% just about 3 years ago. So things continue to shift to the very wealthiest people. And people often wonder, where does it end? Is it going to end up where the middle class is completely wiped out and there's not going to be any middle class? It's just going to be the mega wealthy, and then the bottom 90% are going to be basically living off of the top 10%, or rather working for the top 10%. Well, that's exactly where things are headed if things don't change. And not to have all bad news, let me just start off here with some good news, or let me cover that next. Then we've got some other news that's not so good. Unfortunately, a lot more bad news than good news, but it depends on where you're at in the income ladder. Maybe you're in the top 10%, maybe you're doing very well. I wouldn't know if I'm in the top 10%. I don't feel like I am, but had a pretty good year last year investing, and over the past few years done pretty well, staying ahead of the rate of inflation by a pretty good margin. So comfortable for now. But if things continue in this direction, I'm not sure how much longer I'll be able to keep my head above water here. But still doing okay for now. Hope you guys are doing well as well. Take a look at this, though. Durable goods orders just got a boost. Now, the analysis is that the reason is because this is front-loading ahead of the tariffs. So when we look at the last few months, we do see, because of the fear of higher prices down the road and the tariffs and higher import costs, that companies are front-loading their inventory, right? So we'll see how this goes. The question is, will the consumer still be able to afford even these items that didn't have tariffs applied to them? Because even before tariffs, we already started seeing a big slowdown in the way consumers were spending their money. Even in the middle of last year, we started noticing that. A lot of CEOs came out and said that. A lot of stores and retailers that went bankrupt came out and say that. We heard from Big Lots and other retailers that went under, as the big slowdown in consumers was the reason they finally had to go under. Well, we hear from another retailer here just recently, Kohl's. Let's talk about what Kohl's is doing. Well, we see that Kohl's has come out and reported now that 27 stores are set to close across the U.S. And this comes on a tail of a report of a big slowdown from Kohl's also. The retail said sales declined over 9% in the fourth quarter of 2024 and 7.2% for the year. Kohl's also said that it expects a 2% decrease in sales for 2025. I think it's going to be a lot more than 2%, because when you look at just the fourth quarter, 9.4%, I think it's on a trend of getting worse. I don't see things getting better. Of course, in their forecast, they're going to be optimistic because they don't want to spook their shareholders or scare anybody else, including their own employees. They don't want to scare anybody and make things worse than they seem. But if you just look at the numbers are getting worse. So I doubt it's going to be only 2% this year with Kohl's. Please let me know what you think down in the comments. We see more people not shopping at places like Kohl's or Macy's, or I wouldn't call Kohl's a high-end store. Still pretty low price, but they're more expensive than Target on average, more expensive than Walmart, and even more expensive than a lot of online retailers. But it doesn't stop there. Even Kohl's online fulfillment center is going to see people laid off. And this is just another example of how so many jobs are dependent on the U.S. consumers' spending capabilities. So when people get loaded up on debt and they slow down their spending, naturally you're going to see job losses. Now add on all the other factors, everything else happening right now with all the cuts of these agencies, the federal layoffs, and you're going to see some major pain. And I would say this year is likely going to be one of the worst years we've ever seen with the economy. And that depends on your point of view as well. Some people want to see an economic collapse or an economic decline, an economic downturn, and to them that would be good news because people have been waiting for a deflationary event. The question is, will they allow deflation to happen, or will it be like 2020 where they keep prices propped up for homes, for autos, everything else with a bunch of interventionalist programs? Well, so far they're doing pretty good keeping price levels elevated. Look at the housing market. Home prices are pushing down payment to new highs. And this article here out of Realtor tells us that the new down payment here as of the fourth quarter, of course, set a new record again. The typical down payment in that period amounted to $30,250, which was about $1,000 higher than a year ago. And that would be much worse if it weren't for all the low down payment programs like the FHA loans and others, even non-FHA loans. You can still get into a home for like 5% among many lenders. And something else that I said on this channel was going to happen, homes are just going to continue to get more unaffordable unless something changes. We need drastic changes, not just these little changes that we've been seeing. Yes, there's been drastic changes in the layoffs and the number of jobs being cut, but will we see that transition into lower asset prices in houses, in autos, in the cost of goods, the CPI? We're going to see the CPI number. Will that mean people are going to have lower costs at the grocery store, right? Will any of this, all of these changes, will they translate into lower costs of living? That's the thing that most people are concerned about. The bottom 90%, the top 10%, not so concerned about it because the top 10%, they own real estate that people are paying rent to the top 10%. And pretty much when people go out shopping, most of the spending they do ends up going to the top 10% because you're shopping at companies that are owned by the mega wealthy, the billionaires. So when you go spend your money, in most cases, you're just making the wealthier even more wealthy. Now, it used to be that when you went and spend your money, a lot of that would go to your neighbor, people in your neighborhood, local businesses, small businesses, right? And yeah, there's still a lot of small businesses, but most people are doing their shopping at the big companies, the Walmarts, the Costcos, the auto manufacturers, right? All owned by the mega elite wealthy individuals. And on that note, here's kind of a gloomy picture here. This is put out by Al Jazeera. The American dream is finally over. That's even more dark and gloomy than I've said. The dream is over? Huh. Was the dream ever here? All because the rich must always steal from the poor. That's how they put it. Steal from the poor. And check out that article if you want to, but just an excerpt here. The best days of the American economy are long in the past. The better days for the U.S. economy are unlikely to be seen in the foreseeable future. The 20th century idea of an American dream, where a sizable majority of people in the U.S. could become or aspire to become middle class, affluent, or even extremely wealthy, is mostly dead in the second quarter of the 21st century. And it goes on to talk about what we talked about at the beginning, the wealth transfer, how the top 10% are gaining more and more wealth. It also includes here a lot of things we've been talking about on this channel, the transition from manufacturing to service industry jobs, along with automation, regional shifting, downsizing, and the offshoring of millions of other jobs, the saddling of millions of Americans with healthcare and higher education debt, All of these changes and more have turned the American middle class into a class of strugglers and not strivers. And the worst thing is, this is exactly what the wealthiest of Americans have wanted for decades. People think this is just some sort of you flip the coin and just ended up on the wrong side, or this is the way the ball bounces, or this is just bad luck. No, this is all planned, folks. This is all designed. This is what the economy and this is what this financial system was designed to do. And do you think it's just a coincidence or just bad luck that sees most people get buried under more and more debt as the years go by and the mega wealthy get wealthier? Of course, it's not a coincidence. It's not bad luck. There's people out there that still think that, though. And just to revisit and give you a reminder of something we just talked about recently, consumer confidence just plunged to a 12-year low as Americans fret over their financial prospects. So we were promised by this administration things were going to get cheaper. Of course, it's only been a couple months, I know. But so far, things are off to a pretty bad start, if you ask me. And things look like they're going to get a lot worse here in the near future. Take a look at this. Out of AP, global automakers say the tariffs will be painful for both the automakers and the consumers. In other words, the higher cost incurred from the tariffs are going to be passed along to the consumer. Now, the debate's still out on that. We'll see here in the very next quarter what the numbers are going to be from this quarter here. We'll see probably the middle of April or the end of April what these first quarter numbers were. And when they're worse, people will say, okay, well, the new administration, they just took office. It's only been a few months. Give it another quarter. We'll check it the following quarter, and it's going to be worse. And they're going to say, well, it's only been 6 months. Give it some more time. We'll check it after a year, and it'll probably be worse. Unaffordability will worsen. But they'll say, it's only been a year. Give it more time, and on and on and on. And then at the end, 3 or 4 years, that's finally not worse. They'll say, well, it's their fault. These people over here, they did it. And they got in the way. But on a positive note, gold hitting nearly $3,070, folks. Nice. And I just wish silver would make similar gains. I still think silver is going to be catching up to gold here in the next few years. I know that sounds crazy, but I do think that is in the cards. Because it has so many more industrial uses, and I think the price is really being tamped down by the powers that be. And what they're doing is they're naked shorting the price on the paper market. They're doing the tail wagging the dog type of thing where they're selling, short selling and pushing the price down, even though they don't have the actual silver to short sell. They're borrowing in order to short sell and keep the price tamped down because of the industrial demand, of course. Many would argue that the price of a lot of products and goods and solar panels and lots of other electronic items would go up a lot if they allowed silver to actually go up to its real price, which I think is in at least the hundreds of dollars, but closer to thousands of dollars. All right, and the gloomy facts continue, not just the forecast, but the facts. Small businesses are stalling. A new report shows it could be a warning for the economy. What's happening with small businesses? Well, they're reporting that consumers are also cutting back on spending. And it's no coincidence that we saw a 12-year low in consumer confidence, that debt levels continue to rise, and of course, small businesses, now they're paying higher credit card processing fees. We saw a report just a few weeks ago that said the fees are now between 2 and 4% on every swipe of the credit card that actually goes to the credit card company into the bank. So businesses are getting slammed there, and the slowdown in the consumer. So it's becoming a tougher time to be successful in small business. But on a different topic here, folks, let's talk about this couple that actually are in a Mexican prison right now because of a timeshare dispute. So on one hand, they were taking vacations. It seems like they're doing very well. And now they're in a Mexican prison for over 20 days because what they did is they disputed a charge on their credit card for this transaction for their vacation timeshare. And the Mexican officials didn't see it as just a simple dispute of a credit card charge. They saw it as fraud. They saw it as these people are taking advantage by using their credit card company to dispute a charge and get the money back. And they're both 60 years old. They were arrested after landing at the airport. So they got off the airplane thinking that they're going to have this nice vacation on the beaches of Mexico, and now they're behind bars. The family attorney said the couple signed up for a timeshare with Palace Resorts. The hotel chain has resorts in Mexico and an office in Florida. However, they said when the resort didn't allow them to use their time as promised, they disputed the contract and reached out to their credit card company to dispute the charges. American Express found they refunded them over $100,000 on what they said was fraudulent charges, right? So very interesting. We're going to keep an eye on this case and see how this goes. $100,000 is a lot of money, but if you dispute a charge, you would think that the odds would be in your favor, that the authorities would also view it as something that's siding with the credit card user, because the credit card company basically agreed to reverse those charges. But of course, authorities in Mexico didn't see it like that. And it goes on here. The Mexican authorities saw the refund instead as a cancellation of 13 contracts, and that was malicious in their eyes. And when it comes to this story, I'm not sure how many of my audience or what percentage of my audience has timeshares in Mexico. Probably not many of you, but the broader lesson here is 1 minute you could be feeling like you're on top of the world. You're taking vacations. Obviously, if you're taking vacations, you're probably doing okay financially if you're traveling like that. And then next minute, you're locked up, right? So don't take anything for granted. Enjoy your freedom if you have any freedom left. I guess the bigger picture would be enjoy what you have, even if it's not super fantastic, even if you're not wealthy and taking a lot of trips and vacations. Enjoy what you have. Be thankful for what you have, because, again, you could be on top of the world 1 minute and stuck in a cell the next. All right, folks, moving on here. More layoffs announced. Mass layoffs announced at the Health and Human Services Department. Just came out Thursday on March 27th. 10,000 employees going to be let go. So there's going to be more people scrambling to find a job. We have a major U.S. steel manufacturer laying off 600 in Dearborn, Michigan, citing weak auto demand. So where's the manufacturing jobs that were going to come back to the U.S.? Okay, just give it a few more months. Give it a few more years. Give it a few more decades. See what I'm saying here? On and on. A tech company in California reporting 1,000 layoffs. And that company is Block, and that's Jack Dorsey's company, the former CEO of Twitter, I believe. All right, a few more things before we wrap this one up today, folks. Bloomberg is reporting that a Fed backstop could be going away. A Fed backstop fears could threaten the dollar. A withdrawal of a time-tested liquidity backstop offered by the central bank would represent the greatest risk to the dollar's status. And they're not really detailing exactly what that is, but if any of this backstopping, this funds, this liquidity is pulled back out of the system, which basically keeps the banks propped up and keeps consumers able to borrow money and therefore able to spend money. If any of that's pulled away, folks, this house of cards comes down. The pyramid collapses. When the new money stops coming in, aka spending and debt, then the whole thing comes collapsing down. The question is, what is going to stop it? Well, I've got some information that I think is going to probably surprise a lot of people. There's going to be a shocking moment, a shocking series of news events that I think are going to shock the markets and bring things to a screeching halt, right? We'll talk about that more in our next report, and that's part of the whole black swan thing that I've always said to look out for. Things just continue to go on for so long that people tend to forget that there's a possibility of a market-changing, world-changing event, and we saw that, several times over the past few decades, and we could be leading up to something huge, sizable, to even outmeasure the ones that we've seen here just in the past couple decades, right? So we'll get into that more, folks. Always keep stacking. Let me know what you think about any of this, the wealth transfer, the wealth gap, the wealth disparity, the layoff announcements here. What else did we talk about today here? I wanted to get your opinion on a couple things. The auto manufacturers saying it's going to get worse for consumers and auto manufacturers. The slowdown in the auto industry with that company in Dearborn, Michigan, laying off people. Demand's not coming back, folks. There's too much. People are buried, right? So there goes the buyers. I mean, let me know about this, folks. Keep stacking. Bye for now. Peace.